for where we drive your business. Remember, you can always catch us on GoTV channel 394, as well as on our social media platforms, that is on Twitter at Smart24TV, and in this particular case our hashtag is Financial Markets. And of course we are still with Mr. David from Crested Capital. But also remember to always catch this show every Monday to Friday, 10 a.m. to 1 p.m. And we give you content on the financial market scene, capital and money markets, so that you can know how to save and invest your money wisely, so we can always secure our future. I'm still talking to Mr. David here, and before in the break, we talked about something a little bit more stringent concerning the tough economic times we are living in today. Of course, you will say save and invest, but many people are saying all I can get is all I can spend. Yes, I literally can't keep anything. So in these, in the middle of these tough economic times with inflation and all that, how can we safely invest in capital markets? How can we make them resilient against these tough times?
Well, as I mentioned earlier, it's about before the tough times come for you, yes, you have patient capital, yes, because ideally you can't save what you don't have, yes, and I'm not saying that people should just bring all their money to the market. You have to survive, you have to have a consumption, money to consume, yes, because if you don't consume, then even the risk come, if you don't consume power, you won't have revenues.
True.
Yes, and they will not have a return for you. So in such a time is that's why you have to, by preparing for tough times, is by investing in a company that you deem that will give you a return even a tough time. And let us look at the bank financials. Yes, bank financials during the pandemic, they're not bad. Banks made profit in the pandemic. Not so.
Yes.
Their books were good. So if you had ideally invested in these, you could get a dividend by now.
Yeah.
Yes, and that's a return. And
that's
that's
why
what
the Bank of Uganda has just lifted their suspension on dividend payments.
Dividend payments. So if there are tough times on your company, because your shareholders, it's your company, they are going to give you a return. So it's about how you invest. You investment discipline. How much are you investing? Don't as you had hinted on it, that's for rich people, but no, it's not rich. You can accumulate your stock. You can accumulate your portfolio value. Your portfolio can grow over time. Yes, and you just have a discipline that every month let me put away this to buy X and X and X. If you really think that the companies are not doing well, you diversify and you do into the fixed incomes. Yes, because the central bank and the USE are working on how they can merge the SCD and the CDC. Right, because you can now ably trade fixed incomes on the on the USE. Yes, so if ideally you think this company is not doing well, go to the treasury bills and bonds. As a viewer out there may not know what I mean by fixed incomes, but fixed incomes basically means government treasury bills and bonds. They are fixed income simply because if I put in 100,000 shillings, yes, ideally I will have to reap back my 100,000 plus maybe an interest. Yes, depending on the interest rate at on the yield and whatever the central bank gives at the auction. So that's fixed. It won't fluctuate. Yes, you know when it's coming back and how much it will be. Yes, and if the idea we don't understand it, you can always approach Crested Capital, and we can take you through.
But talking about treasury bonds and bills,
yes,
given that we are in inflation times, Bank of Uganda, Central Bank has actually raised the central bank rate to 7.5 from 7, I think.
From about 6.5.
From about 6.5, yes. And usually, I don't know, some analysts say that whenever the central bank rate goes up, even the festival, is it the festival?
The interests,
coupon rate?
The coupon rate,
also goes up for the treasury bonds and bills. Is that true?
Yeah, they tend to move in the same direction, depending on what the government is pursuing. Because the government wants to lift interests, they have to lift also the benchmark interest rate.
Yes.
That is the CBR. So if it increases, so that's why it could be attractive to invest in the fixed incomes.
Right now.
Yes. because the bills have dropped.
Yes.
They had dropped in the pandemic to a low. Because currently, I think 1 year is about 9.8. Yes. So if the CBI are going up, we could see it also moving up. Yes. So it could be a space someone could invest.
Yeah.
Yes.
I've heard treasury bonds and bills can actually go up to 17%.
Yeah, they could.
And this is literally interest on,
Yes.
Say after that maturity period.
Yes. And a bill, most Ugandan out there may think, a bill is expensive, but ideally it is 100,000.
100,000.
Only 100,000. So, but as I mentioned, your return will be dependent on what you invest in. Because you won't give in 100,000 and expect to have a return of as much as one was put in maybe 20 million. So I always urge you play safe. You play safe. As I said, there are fixed incomes. You won't lose on your money. And I don't know, it could be a very huge catastrophe that the government fails to pay you back. Yes.
So, unfortunately, many people don't actually understand how, these auctionings and so on go on. Because we hear in papers and sometimes, the Bank of Uganda is auctioning.
Yes.
But no one ever knows what goes on. Okay, yes, it's auctioning. Should I go to my bank? Should I go to my broker? What should, the investor know, whenever these opportunities come out? Who should he approach? And where should they start?
Okay, let me start it this way. Yes. Auctions, treasury auctions are always there every 2 weeks. There's an auction calendar. Yes. Ideally, I think next week we shall have an auction, treasury auction, and we have what we call primary dealers. Yes, that those are commercial banks which can ably buy for you treasury bills. But we also have the Uganda Securities Exchange, where through your broker. Yes, and ideally, I won't speak for the banks. Since I represent a stock brokerage. I talk about the stock brokerage. When you approach Crescent Capital or any other stock brokerage, they will take you through. Yes, what bills are available, what bonds are available, how much you need to invest, how much will you reap, and for how long do you want to invest, and they will also guide you because you may ideally want to go back to school. Yes, but you want to invest. What can you do? What is the best option for you to buy? Should I be going to the stock market or should I go into the fixed incomes? Yes. So they always guide you on that. So it's not cumbersome as one may think, but usually, because what I didn't tell you is that Quested is retail centric. Yes. We look at what people normally say umuntu wawansi. Yes. We look at that individual. Yeah. The one who has 100,000, you have 200,000. How can we help you grow? Yes, because ideally, if you were to apply a number line, yes, if you have to apply a number line and say that this is how I'm going to invest, these are the periods I'm going to invest, you see that your money will always be coming back at a particular time, so that it will help you grow on how much you're investing actually, without recouping that money. Because if I invest 100,000 and after 3 months I eat it and I put in another 100,000, that's just investing 100,000 every time. But if I don't have a million to invest at once, I can accumulate that million over time. Yes, and that's why it always brings back to how patient are you. Yes, and what is your investment plan? Because if you don't have an investment plan, then you just gamble all through. Because you see, most of the clubs you talk to, they will tell you they started with a plan of starting up. Maybe they wanted to plant trees. Then they went into growing maize. Then now someone gave them another idea of let us have poultry. So at the end of the day, you've not done anything actually. But as you think on where else to diversify, you can always bring your money and we help you grow it. Yes.
So in other words, every individual who is starting to invest in these securities should have an investment plan.
Yes. If you have no plan, then what are you doing? That's why we always start a financial with a budget. Yes. Yes, you plan. Although we have multiple budgets coming in, which are off the budget, but supplementaries all from all ministries. But that is poor planning, actually. Yes. But if you plan well, then you will be able to achieve.
Let's look at an investment plan. For example, for age brackets, because I can use age brackets to picture the kinds of people who are watching right now.
Yes.
There are people who are in university, there are people who are in secondary school, there are people who are young adults just starting to work.
Yes.
And then there are people who have already worked and probably are about to retire.
Yeah.
Now, for example, for the young man, you as an advisor, this man has just started earning his little money, and he wants to start investing in securities.
Yes.
What do you think should be the first thing for someone who is younger, to start investing in? Should he start with the long-term, the riskier ventures like in the equity market, or should he start with safer ventures like in the treasury bonds and bills?
I'll take it my own perspective.
Yes.
Ideally, if you're young, you should be able to take on risk. If you can't take on risk now, then when will you do that? Yes. You take on risk now that you're young, because for the older people, I will tell them to always look for cash flow, because at old age you won't be working. You're looking for cash flow. Yes. And with the bills which return you every 6 months, that's a cash flow. But how much have you invested to get that actual cash flow? Yes. As a young person, grow your portfolio. Grow your portfolio in the stocks. To me, that's what I presume is better for you. Yes. Because now you can save up, say, on your pocket money or something at university, or whatever allowances you get from the university. You can take off like maybe 100,000 a month, and that's the high. 100,000 a month, because I've been at campus. Taking out 100,000 from yourself every month is a hard one. But join up. Form a club. Because there's power in number. Yes. Have a number of you and invest and grow. Yes, that's the ideal plan you could have. Form a club and invest as a club. You'll grow.
So you'd rather actually pull together a lot of money?
Yes.
There's something called a collective investment scheme. I don't know if you have that at Crested Capital.
No, we are brokerage purely.
Entirely brokerage.
Yes. But we do
for clubs.
Yes.
Okay. You help them invest.
Yes.
Do you think also the idea of a collective investment scheme in Uganda that's taking actually lead and people are pulling together can actually work and help people get more involved in investment?
If you are doing it right in your investments in your club or circle, you can benefit. Because as I give you the last story of a club which is always having ideas, because they don't plan anything. But if you have your club, you can always reach out to us and we talk to you how best you can invest your funds. Because if I have 100,000, you have 100,000, that's 200. If we are 10, that's $1 million. Yes. But so we shall reap on a return of $1 million, not just 100,000. So and ideally 30. If you are 30, then it's a big club. That's a big club. But that is a good amount to invest. Yes.
So in as you help these clubs, and do you give them the chance to choose exactly which companies they want to invest in, or you'll be like, okay, this is how much we have, but can you give us a little bit more advice on where we can put the money? Mine
as an advisor is give you the information. Yes?
Yeah.
Because ideally when you are filling an order form, it is you filling it, not the person who advised you. Because my liability is to my information. Yes? I only advise you, I give you the options. You choose. I don't tell you for you the decision to invest. You make the decision yourself.
You make the decision after being informed.
Because it needs the club executive, which will take it back to the club, and you decide, have a resolution on it, then come back and invest. Yes.
So, and entirely this idea of investing and saving has been so affected by the mindset people have as a result of so many things like hand to mouth. People don't want to keep anything aside. And the feeling that actually it's for the rich people with, as you have said, the higher your investment, the higher your return. So people usually have that fear of saying this small money, honestly, I don't think I can reap. For example, Cipla, when it declared its dividend of 1.5 I think, or 1.5 I think, around there. And someone is saying, okay, now if I have 1,000 shares, that is only 1,500. It's the only thing I'm going to get. They look at it as small, and they get discouraged, and yet you're encouraging us to, use the little we have. What is
the question? The question will always be, why do you have 1,000? because you very well know that the return is on dividend, on shares you own. So why don't you grow your shares? That you have a bigger. Yes. If you ideally feel that the company is, maybe the counter is not performing for you, exit and buy one at you. That's why you see most Ugandans want to put in the money and relax passive investment. It's not actually. It won't work. It will not work for you. Be active. Be assertive. Seek the information and that you know where to invest. That's why I say that you always look for advice on where to invest and follow up the company. Yes. That you always have a better return every year. Because you don't tell me that this year you bought 1,000 shares at IPO. Yes. How many years down the road now? You see, you are still at the same. You are not moving. Yes. Fine. You said the share price has fallen. It is now cheaper. Why aren't you buying a cheap one? You want to say that there are no prospects of it going up, improving. Yes. Or you can average out. Yeah, because averaging out, like you bought at this. How best do you see your portfolio grow? By reducing on your price, the price you bought at. That is the average price. Your average price. Take it lower. That when at any given point in time where the share price starts moving up, you're already in profit. Yes. Because if we may call it investment, but for us we term it as risk. Yes. The money you put it in, the money you are risking. Because the stock market is risky. Yes. Because of the fluctuations in prices. So how do you manage your risk? Is also important for you to do.
Risk management.
Yes, risk management.
Okay, we're going to go into a short break, but we return with our last segment. We want to now talk about when do you buy, when do you sell, when do you pull out, when do you say, okay, enough is enough, I have to pull out of this. Yes, like you've said. And so that people actually, what we want is to people to understand the market, so they know what they're dealing with, and they know exactly their position in the company, So yeah, we'll return with that very shortly after the break. We are still with Mr. David